Thank you for joining us today for our weekly webinar. My name is Alicia Race. I'm a partner here at Fourlane. I'm excited to talk to you today about understanding financial statements. If you missed any of our previous videos, you can always find them on our YouTube channel, youtube.com/Fourlane. Remember, subscribe so you can get notified when new videos come out. Also, you can connect to us via our Fourlane Facebook group at Fourlane QuickBooks Enterprise. You can connect to us and your peers as well. As always, I want to mention our Fourlane on-demand support service that we offer. This service is only $25 per QuickBooks user per month for up to 5 users. Then it drops to $20 per month for 6 or more users. Definitely well worth it. I want to share former controller I used to hate to call any support line, didn't matter what it was, because I knew that I would be sitting on hold listening to the terrible music, and I knew that my time was super valuable and I could be doing something else. So we want you to know that if you do use our on-demand support, you have access to us directly. One of our experts, not someone else that is reading a script. It is one of our staff members, so you can have us direct. Okay, a lot of times people say they did not know that we offered that, so I like to make sure I'm bringing it up. All right, so last week we talked about KPIs and why you need to know them. This week, understanding how to read financial statements is a continuation of our CFO services that we offer here at Fourlane. Our purpose is to educate and create opportunity. And hopefully, by sharing our knowledge in these webinars, we are doing just that for you and for your peers. So hopefully you're ready to talk about financials. I say that and I laugh because I know some of my clients, they do not like that word. So for everyone on the call today that frowns at that word financials, hang tight, don't go anywhere. I promise I'm going to try to do my hardest not to bore you with any of these too high-level accounting terms without explaining what they mean. Just remember, the more you know, you have the power to manage your business and to make those educated business decisions. I like to share with my clients the good news, which is you don't have to be a genius or a financial wizard to understand and prepare basic financial statements for your company. It's not difficult at all to learn the basic elements of business accounting that goes into preparing these documents, especially with QuickBooks. QuickBooks has standard canned reports that are already available in the system for you. There's 3 financial statements that are the most important to a business and to a manager and to a business owner. Those are the balance sheet, the income statement, and the cash flow statement. So my screen, this is probably the last time that you'll see the screen. We're going to go in product and spend our time in product. But I just want you to kind of look at underneath the balance sheet. I've got a formula there. I don't want to scare anybody with it, but I'm going to explain that formula to you. On the income statement, underneath that, you see that I put the profit and loss and also the P&L report. Well, I kind of like to explain this. And the reason why I did this, it's very similar to all the roads that are in Austin. It seems like every road has 3 or 4 different names to it. And so if you're new to Austin, someone will call a road a total different name and you're like, what? Right? So if someone says the profit and loss, they literally mean the income statement. If someone says the P&L report, it's the same thing as an income statement. The income statement is just income, so revenue and expenses. And then our cash flow statement, we're going to pull up in QuickBooks as well. it shows us operating, investing, and finance. Okay. All right. So we are going to get to QuickBooks. So I do have my sample file. Gotta love our dates and sample files. So I'm going to go to reports, and our report menu, we have our standard canned reports, company and financial. Definitely important for us to start here to see how our business is doing and what it is doing, right? Where are we spending our money? So we've got our profit and loss at the very top. Our profit and loss standard report is the one that we use for our month-end close reporting and the capabilities to be able to see how much money you're making, right? Hopefully not losing, making. I'm going to go ahead and open that one. I like to look at this at a year to date. So I'm going to customize this report, drop down and say this fiscal year to date. And I just want to see my columns at the top by quarter. I want to look at it high level. I'm going to go back and I am going to run my balance sheet. So the profit and loss section has every kind of standard canned report that QuickBooks has already predefined, set up in that section. And then we have the balance sheet. We're going to do the same thing here. And we're going to total by quarter. Okay. And one last one, I'm going to go ahead and get this ready. Our statement of cash flows. So we're going to start at the balance sheet. What is the balance sheet? Well, it's really an essential part of your company's financial records, and it should be one of the first documents you create. The information on a balance sheet is separated into two sections. At the very top, very, very top, you see the company asset. At the bottom, right here in this gray section, on our bottom underneath, we have liabilities and owner's equity. These are at the bottom. So what are these assets? Assets, I like to describe as anything of value that your company owns, including any cash in your bank accounts. The term generally applies to anything that could be sold or used by the company itself to create a value. Examples, and they are on the screen. So some of these examples, I like to think of it as physical property that you can touch, right? So explaining it in that manner hopefully helps. But we think about a vehicle, our office furniture, we could resell on Facebook Marketplace and make some money, right? Vehicles, that's a pretty hot commodity right now, especially if it has all the chips in it, right? Inventory, those are all things that we can touch. Those are assets. Okay. Accounts receivable, do you consider that an asset? Absolutely. I may not have collected that money yet, but that customer owes me that money. I performed a service or I supplied a good and they owe me. It is due to me. So we're looking at our standard canned balance sheet report. All I did was change this at the very top. We can do this here. Changed it to look at it at a quarter view. Okay. This balance sheet gets created in QuickBooks by the chart of accounts that we set up. Okay, so if I go to my chart of accounts, and this is really for all reports, right? But there's a reason why when you're first setting up QuickBooks and you go to create an account, you have to use one of the predefined account types because in the background, it's got a special place in the canned reports as to where it goes and where it belongs. Within QuickBooks, we do not have to create how we want our reports to look. It is already there for us. Okay. Also, our items are coded to an account, and ultimately, our account goes to the balance sheet, goes to the profit and loss, goes to the statement of cash flows, it goes to inventory evaluation, goes to all the reports that are in QuickBooks. Okay. So every time we enter a transaction using an item or an account, our financial statements are automatically updated. So these numbers, they are supported by all of the transactions that have taken place in the system so far. Okay. We don't have to do anything. So one of the reasons why I enjoy working in QuickBooks. All right. So we looked at the assets. Let's go ahead and take a look at liabilities. Your company's liabilities consist of debts owed to lenders, financial institutions, maybe we borrowed money from the bank. Maybe we borrowed money from the bank to go get a new piece of equipment, to go into a new product line even, right? But we borrowed that money. It's owed. You also can owe money to your suppliers, to individuals, subcontractors maybe, 1099 vendors. How about that unpaid payroll expense? See our payroll liabilities down here, this total? This is a liability. Ooh, and the next one, taxes owed to the government. Yep, that's definitely a liability. They will come get that money. Okay, so liabilities, they also include any obligations that the company has to provide goods or services to clients in the future. That is called customer deposits. So if I have a retainer, if I require 50% down payment, that is not an asset to me. That's not an asset to my company. It is 100% a liability because I owe that customer that good or that service. Okay? So if you don't remember anything else from today, at least remember liabilities are the things that you owe people. Okay? And then let's go to the equity section. Equity has like this very small section at the bottom, but it's really important. Okay, so you can think of this as owner's equity for a small to mid-sized business. Or if you have outside investors, you could think of it as shareholders' equity. It's normally called shareholders' equity, right? If you just have one person that owns it, it's normally called owner's equity. But the equity section. This equity section is the amount of profit that remains in the company after all of our liabilities are paid. It's often referred to as our net worth or net assets. So going back to that math equation that was on my slide deck, there's the main rule about the balance sheet. It is my assets, these total assets here, they must, keyword must, balance to the liability and equity section. If they do not, we have problems. Also, if they do not, QuickBooks will automatically show you that it's out of balance. And the reason being, it is supposed to be in balance, right? We need it to be in balance. Any amount that we add to the company's asset at the top, we must add to the company's liability at the bottom. Even if it goes to the P&L, it will ultimately flow to the bottom in our net income. A balance sheet doesn't show how cash flows in and out of a company during a particular period. That is a profit and loss, or an income statement, or a P&L statement. But it does provide an overall snapshot of a company's general financial strength. So I do like to explain also, the balance sheet is a running total. This accounts payable number here, it's not just made up of all the bills I put in this month. It's made up of all the bills for all time that I have not paid. So if I didn't pay a bill last month, it's still sitting there for me to pay it. You're not getting off scot-free, right? Still got to pay it. Okay, so income statement. Profit and loss. What is it? It outlines how much revenue a company earned during a specific period. This is only for a year. Okay. It shows all the expenses that were associated with earning that revenue. If anyone's ever heard of the bottom line, right? That is this statement. On this statement, you can see my bottom line. That's what this net income is. Okay. So I want to go in and show you. The reason why I spend so much time on the balance sheet is because if the balance sheet is correct, go back to this real fast. If the balance sheet is correct and this ties, we can reconcile all of these balance sheet accounts inside of QuickBooks, with the exception of the ones that have subledgers. Accounts receivable has our AR aging. Accounts payable has the AP aging. We can reconcile all of these. So if our balance sheet's correct, then our P&L has to be correct, right? Because our P&L flows into our net income here, flows into our balance sheet. See how it says net income and those numbers match? So again, if our balance sheet's correct, our P&L is correct. All right, so your income and your COGS section, they represent why you are in business. What are you supposed to be making money for? I mean, obviously you're in business to make money, right? Otherwise, we wouldn't be doing all this hard work. But if you're in business to provide a good or a service, right, and you receive money for that good or service, that is your revenue. That is your income. That is your sales. Again, those Austin Roads, 20 different names. Income, revenue, sales. It's all the same thing, right? That is the money that you're receiving to provide that good or service. Cost of goods sold. Seems like it would be so obvious, but I promise you, I've done sales tax audits, and you can constantly say, well, is this a cost of goods sold? Is it a company expense? How do I really classify this? And I like to explain cost of goods sold is anything associated with me selling that good or service. So if I had shipping charges for a product I'm reselling, That is cost of goods sold. I would not have paid that freight if I didn't buy this thing that I'm reselling. So when you subtract your income from your total cost of goods sold, you get your gross profit. I'm going to go to the total gross profit down here. Hopefully you can see this, 197,989. We want this number to be higher than your company expenses. So on this example, if my company expenses are $200,000, I have a loss, right? I want my gross profit to be higher than my expenses. I think a great way to explain company expense is viewing it as anything you spend to run your business. Or sometimes I explain it as think of it as a personal company expense. Is this for the business? So gross profit less my expenses, so my total expenses, gives me my income. Okay, there may be interest and maybe some things that will be after this to give us our net income, but some companies don't have that. Not everyone will, but some do. So our net income, that is how we know if we are making money. If this is positive, we've figured out that equation, right? If not, we got to go back and we got to figure out, are my company expenses higher than my gross profit? Because if they are, I got to go figure out how to reduce some of those company expenses. I'm spending way too much and I'm not making enough. Or maybe the times have changed, right? Maybe we need to start charging more for our product or our service because we're having to pay more expenses, right? Big word, inflation, that we've been talking, everyone seems to be talking about. Turn anything on, even though I try not to watch the news, you just get in the car and you can hear it, right? So this is really important for us to look at, okay? Our statement of cash flows. Our statement of cash flows, it's usually divided into three main parts. Our operating, which is our net income right here. Investing activities and financing activities. So cash from our operating activities, that's going to come from what we just talked about. Our net income, or hopefully not, our net loss. But instead of showing all of the income expenses for a period, the cash flow is just showing our actual income and what we receive as cash and the actual expenses paid out. Okay. It does also account for numbers for non-cash items such as other incomes and expenses at the bottom line that we talked about, which is not everybody has, but some people do. Like right here for this example, interest expense. Okay, so it accounts for all of those things. Cash from investing activities. It outlines the cash flow from all investment, such as assets, which we know that is going to be our accounts receivable, our inventory, right? It's going to be our prepaids, equipment, anything like that. Also going to have, if we sold any property or if we had any investing activities or anything like that. So it is going to show us the money that we received from that. So cash for financing activities, and I'm trying to get there. We're 1 more minute. So cash for financing activities generally relates to cash received that we paid as loans from any banks or financial institutions. Okay, so we think about cash flow. It is not the cash, like how much cash we have. It is the change of cash at the end of a particular period. And I hope that this helps you understand the company financials a little bit clearer. I hope that we can use this information in our day-to-day activities and making better business decisions. Thank you so much for joining us today. We hope to see you next time.